Tips for a successful purchase process. In this video, we'll share tips on what to do before, during, and after the mortgage process so you can buy and enjoy your dream home. Specifically, the steps we'll cover include what to do before applying for a mortgage, during the loan application and mortgage approval process, at closing, and after closing. Before applying for a purchase loan, it's important to first consult with a mortgage lender. The lender will help you find the best loan option for your situation and help you determine your budget and provide a pre-approval letter. This will show your real estate agent and sellers that you're a serious buyer. Don't make any large account transfers or purchases. This will trigger additional questions by the lender about the transactions and may cause your loan to be denied. Keep your credit card balances low for at least 2 months before your purchase. A high balance can trigger a higher interest rate or cause your loan to be denied. Budget for your down payment and closing costs. Purchasing a home will typically require at least 3% of the home's value for a down payment and an additional 2 to 5% of the loan amount for closing costs. You should budget for these costs in advance of applying for a mortgage. And finally, get organized. Locate the documents you'll need for your application, like pay stubs, W-2s, tax returns, and bank statements in advance to speed up the application process. When filling out the loan application, it's important to set aside time and fill out the application completely. This will help your lender get an accurate picture of your finances and make the approval process easier. And don't stretch the loan size. Lenders will typically want your total debt-to-income ratio to be under 43%, so too large a loan size will hurt the approval process. To learn more about how lenders evaluate your mortgage application, watch How Do I Become a Homeowner? It's also important to get in the right mindset early. Buying a home can take from a few weeks to many months and can involve a number of people. You can reduce the time it takes to buy a home by quickly responding to requests from your lender, real estate agent, and attorney. The next step is the mortgage approval process. The mortgage approval is iterative and requires you working with your lender to complete approval as fast as possible. During this process, it's important to communicate with your lender. You can reduce the time it takes to close your loan by weeks by quickly responding to your lender's requests and asking questions early when you're unsure of a request. Finally, review your loan estimate early. You will receive a loan estimate with loan details within 3 business days of completing an application. Make sure to review the loan estimate and ask any questions upfront before proceeding with the loan. Closing is when you sign all the documents to finalize your purchase. To make closing as easy as possible, review your closing disclosure before closing day. Your lender will send you a closing disclosure with the final loan terms and details at least 3 days before closing. Review the disclosure as soon as you can so you're familiar with the terms before closing day. If you have to wire funds for closing, verify the instructions with the settlement agent 2 to 3 days before closing. And if you're wiring a large amount, it's best to initiate the transfer in person at a bank branch, since there are sometimes lower dollar limits for online transfers. And bring a checkbook to closing in case there are small rounding errors or adjustments at the closing table. This will help prevent any delays in closing. And finally, there are steps you can take after closing to help your homeownership experience. First, save your closing packet and keep all closing documents together for safekeeping. Change the locks on your new home. In addition to previous owners, real estate agents and contractors may have keys to your home. Change your address. Make sure to update the postal service, any financial institutions, your employer, and utility providers of your new address. If you're not escrowing your property taxes and homeowners insurance with your lender, it's important to verify these amounts and when they are due to avoid missing payments. You can also enroll in auto pay to reduce the likelihood of missing payments. And finally, don't be afraid to ask for help. If you experience a financial hardship and find it difficult to make your monthly payments, reach out to your lender and servicer as soon as possible to see how they can help you get back on track.